Welcome to Market Insight for the week of October 14th through the 20th. Starting with our top-down approach on the monthly chart, monthly continues to look constructive. Nothing really has changed. As we've been talking about during the past couple of weeks, we did have a little supply come in last month in September, and the market has to negotiate that, but thus far, we're holding support, and it looks to me like a normal monthly retracement. So let's take a look at let's turn to the weekly and take a look at that chart. I'll erase what I had before here. Last week, after 2 weeks of accumulation, we have a couple of weeks of accumulation here. But last week, the market runs into supply. So during the last week of September, talking about this bar here, the 2 weeks ago, the market began responding to the support area here, the demand line off on the weekly chart here. But there's a large amount of support here. We have the August 2022 high of 43.27. We have the weekly demand line coming up here around 4,200, and 4,200, as we've talked about, is a significant area, really an access line. So this whole area is pretty good support in here. And so we would be expecting the market to be responding to that support, and that's what we're starting to see. Began to respond to it 2 weeks ago, and then last week, and just to be clear, it's responding to it, the weekly demand line with narrowed range, right, on increased volume and a close off of the lows. So that's a pretty good indication that buying is coming in, this effort versus result. The first indication, perhaps, of demand. And then the first week of this month, last week, here, had a nice, stronger response even, coming down underneath the previous week's low and coming underneath the weekly demand line and reversing up and closing up on its highs. And so we have a key reversal here. We call this a key reversal. And it signifies buying off of support in this case. And the buying came in on good volume. All coming in at significant support. So all bullish. And then this week, we encounter some supply. And we'll look at the details of this in a moment on the daily chart. But for now, we see the market comes back up into the area to the left, which had supply, right? We see supply coming in here. So it comes back up into the supply area from a few weeks ago, and it encounters resistance. And so the bar comes down, closes mid-range, but it holds the high of the prior week, and it's holding the swing low here at 43.50 support, closing up above that level. So all of that is still bullish, and it's not really surprising to see what appears to be a weak bar at the start of a rally like this. So let's see what the daily can tell us about this and how weak this really is. So looking at the daily chart now, after closing strong last week, this is last Friday, closing strong on good volume with widespread and as I say, big volume. The market followed through on Monday, right? Didn't need the volume to come out, but just push on up through. After testing into the pocket, I think we talked about this in last week's Market Insight, that this would be a potential area of support, the pocket area here, and it was. So this market tested into the pocket and also halfway into Friday's vertical acceleration up, right? That's the test here, and has a nice response. And then Tuesday, we see follow through. We see continued follow through as we would expect off of the close on Monday. But on Tuesday, the range narrows and we get a close in the middle, and that occurs on a slight increase of volume over Monday. And this is occurring as we approach the 44.34 resistance area. And this area is actually significant because, not just because it's resistance, but also because, as we see here, I think this is the right volume, supply accelerated as it broke this level. So not surprising that it's still strong up there. And so now as we come back up to it, it naturally acts as resistance. And we see the daily respond with effort versus result, right? And a narrowed range, some effort versus result and narrowed range, and the poor close. So supply is starting to enter. Then Wednesday, we have an inside day, or maybe almost an inside day. In any event, it's a narrow range day, and the volume drops off. And so we have demand being tired here, exhausted. And so the markets become vulnerable to a pullback. Now, this is no demand, and this is where we look for no demand. In other words, this is where no demand is important and where it's really a part of the overall, I don't want to say signal, but the overall, picture of the market here. After nearly a 200-point rally, give or take, up, supply enters at resistance and demand gets tired, right? There's just not enough fuel left to push the market over the resistance. And so the market is now vulnerable to a pullback. That seems pretty logical, right? This is where we look for the no demand, and this is where we're finding it. So now we might go higher still, but the market's now more likely to have a reaction at this point than go higher. And on Thursday, we do go a little higher. Market does go a little bit higher, but then it reacts as we would expect. And the widespread increased volume and relatively poor close indicates selling's come into the market. Now, some traders may say to themselves, yeah, but we're closing off of the lows, and so there's buying there, right? And so yes, there is buying, and it is important, no question. There's no doubt that there's buying there. Otherwise, the close wouldn't be off of the lows in almost mid-range. So there's no doubt that there's buying, but that's looking at it a little bit in isolation. And only assessing the single bar. We always want to kind of look at the context here and see what else is going on in the immediate background. And the fact that this bar rallies up, couldn't hold above the highs of the prior two bars, comes down and then closes on the low of the prior bar and under the close of where we first saw supply start to come in, right? So the bar 2 bars back, the narrow range bar here. So that to me is pretty bearish story. Nevertheless, there is buying coming in off of the lows, and that factors in a little bit later in the story. But at the moment, we see this as supply here. So another way to think about this is this: if this high volume here were all buying or mostly buying, why couldn't the buyers hold the highs here? Or certainly, why couldn't they hold the lows down below here? Why couldn't they rally it up and push through on all that volume, an increase in volume. And the answer is because supply came in and supply was dominant. So while there was buying on the bottom here, the selling was dominant in the context of resistance and supply entering the market, then followed by no demand. And then this is sellers coming in and pushing the market down. So despite the buying that occurred at the end of Thursday, Friday, the buyers couldn't sustain it. They pushed it up a little bit, but we see more selling come in on Friday. We fall to new lows, and with a close around Thursday's low. And then this occurs again on an increase in volume. So supply present for sure, but we're also seeing shortening of the thrust and effort to go down, right, as we're approaching important support. So, and this is what I meant, that the buying will come in a little bit later on this prior bar here that we were talking about. Now, as we're looking at this area down in here, now the buying is important, right? Now we're expecting buying to come in, but up in here, it was sellers who took advantage. Now buyers are stepping in. A little bit subtle, but important to recognize, I think. Anyway, in terms of the larger Wyckoff story, we've seen some accumulation at and just below the daily and the weekly demand lines. We started to see accumulation here, painting in the low of 42.77 and then pushing up, and then more accumulation here, right? And this is occurring at important support, as we talked about, and also as we talked about earlier, this is the accumulation of these 2 weeks here on the weekly that we discussed a little bit earlier. And I said, remember, we'll talk about the details in a little bit. And so that's the details of this. And let me get my charts back together here and erased and all. And now I should back to a daily chart. Yes. Okay. So bullish behavior at the lows here, at important support with a positive response up, right? We get a nice move up, good volume, good, nice firm closes, wide spreads and stuff. We're breaking both the local resistance here and also the higher time frame resistance. And you can actually consider all of this the higher time frame resistance, but this is the, a weekly or a monthly low over here, both actually. So we're breaking on this time frame, we're breaking the higher time frame resistance, and we're making a higher high, a higher swing high right here, right? And and this move up has brought price back into the trend channel, back inside the trend channel. And so now price is pulling back into the support area again and into the vertical acceleration area, right? Now, although there was a lot of volume and a lot of selling, the market didn't react down as we're coming into this area, partly because of support. And think about this, even in the face of a new war breaking out in the Middle East, the selling was largely contained, kind of bag holding, right? We might be thinking about. So the market next week could make a little bit lower low, could continue to go down a little bit. I mean, the trajectory is down, and so we could see it go a little bit lower, and that shouldn't be a surprise because we are closing near the lows on Friday. So we might see some follow through early next week, but a logical spot for support to form would be between the last week's low, Friday's low, and the August 2022 high of 43.27. That area, not necessarily those numbers, but that area, right? And assuming support holds, and that would continue to the shortening of the thrust and all of that. So assuming that support holds, I'd expect the 44.34 resistance to break, And then if that does, we'd be pushing up to 45 and a quarter, 45.25 area, the supply line on the daily, and I think the weekly as well, on the daily chart, excuse me, not the weekly. So if I'm reading this wrong, and which is always possible, there's more supply, or the supply is stronger than what I'm seeing. So in that case, we'd be breaking down below 43.27, and we'd be heading down towards 42.25, possibly finding support around 4,300 here at the pocket, but probably more likely if we did head down there, the first level of support I'd be thinking about would be about 42.77, where demand first started to come in. Think about preliminary demand. So that would be the spot where we would expect the market to hold. If it's going to hold somewhere up in there, that would be a logical spot for it. But I do think that heading all the way back down towards that level, I think that scenario is less likely. And we're more likely to see it hold in here and then rally up, as I described a little bit before. All right, so let's take a look at the major markets, see if they can give us any insight. And as we look, the NASDAQ here looks the most bullish. It held its trading range low and accumulated it down below, and then pushed up, creating a higher swing high, and now coming back to support, and so far holding that support. The S&Ps up above here came down underneath support and then found it to be resistance, rallied back up above it now coming back down to test that old support to see if old resistance to see if it will now turn into support, or old support to see if now that we've gone underneath of it, we've come back up above it, will hold. Whichever way you want to think about it, it's the same. Will this area hold? And so far it is. It's testing that area and so far holding. Now the Dow looks weak though, doesn't it? It sure does to me. It's come underneath its support and couldn't get up above it, and now coming back to it, and it looks like it's just hanging underneath of it, unable to rally up above it. And that's true. But there's one bright spot here. In the context of the last couple of down days here, with both the NAS and the S&Ps breaking down a bit, and the war in the Middle East and all that stuff, right? And the House, also in the background, Congress is unable to elect a speaker, and that's, we're heading towards potential problems there as well. So things aren't, the reality out there has got some problems to it. But the market, as I said, didn't really react all that much. Reacted more on the NASDAQ than on the S&Ps. But look at what it did on the Dow. The Dow kind of just yawned at all that stuff, and painted an inside day on Friday. So the Dow's holding gains in here while the others were reacting. And once again, the Dow may give us the early clue as to whether next week is going to have the more darker scenario of us heading down towards the lows again, or a more positive scenario where we start pushing up above last week's high, Friday's high, Thursday's high. That could easily spark a nice rally in the other markets. So I'll be watching the Dow as the early canary, so to speak, in the coal mine for some clues. Let's take a look. Coming up this week on Monday, the October 16th, after the close at 4 p.m. Eastern time, we'll have a membership meeting. We'll talk about David's book. It's actually the second half of chapter 9. So it's part 2 of tape reading part 1, if you will. But we'll go through that. Some pretty interesting stuff in there I think you'll enjoy and get a lot out of. And then we have deep practice on our normal schedule for Thursday, the 19th. So enjoy the rest of the weekend, and I'll see you Monday to talk about David's book. See you then, everyone. Bye-bye. Take care.